The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host at the headquarters of TFNN, your headquarters for technical investing and trading. And we've got a very interesting day out here today. We're up on very light volume, not even 1.85 billion shares today, just at 1801 on the S&P cash. We got to a high of 1802 so far, so a very, very light volume push. I covered my shorts, some of them on Wednesday, some of them on Thursday. I suspect we're going to probably have a light volume push all the way into Wednesday's close. We have probably two opportunities for a sell-off before the end of the year, or actually one opportunity for a sell-off before the end of the year. That'll either happen on Black Friday's sales numbers, so we've got a week from today. It's only going to be open a half day, but since Target, Walmart are going again to be open early at 6 p.m. on Thursday night, we're probably going to have some fairly decent numbers by business close, which I think is noon on Friday. Then we've got that Monday, and if they come in horrifically bad, we might see some selling pressure through the end of the year. From looking at the charts, I spent several hours last night. It looks much, about a 50-50 probability that this thing just goes up a point or two every day until the end of the year. There's no volume, but there's also no selling pressure. We can see, and what I think we are setting up is a blow-off top in the markets, and that could be coming back in the second or third day back in at the start of the year. Everybody says, there's no problems. They all pile in, and maybe we set our high for a long time there. We've seen a lot of stocks blowing off tops. Netflix, one of the more famous ones, at least one that I called. We had the 3D stocks earlier this week, still showing some significant weakness, at least one of them today, off 8% today. So we'll go through that. But we have a market that looks very close, as if we are going to get that same kind of 1999 to 2000 El Dumpathon. And when I go back and look at my notes and trading notes from back in those days, the volume pretty much right around Thanksgiving really started to fall off. And it went all the way with extremely light volume into the end of the year until January 3rd. We came back and started seeing stocks fall out of the skies like doves during dove season up north when we were hunting. But it is one of those markets that maybe the oversold condition just bleeds off slowly. But my guess is that we're going to see these kinds of 2, 3, 4 point days up and down with a little bias to the upside for a while. And if we don't get a significant sell-off and selling pressure starting into and around Black Friday, that we're going to just see probably, I can see the market closing at 1820, 1825 on the last day of the year. I could see almost nothing and no movement price I can't even say it, priced for perfection before the end of the year, only to see everybody come in and start selling come the first of the year. So it's going to be a tough road to be a short for the next 40 days or so. But we'll know a lot more by the sales numbers coming out on Black Friday. And of course, those numbers are probably not as important as the margins that they are able to garnish I wrote about it in today's Tech Insider. We talked about it last week. It's all about free cash flow. It's all about margins. It doesn't matter what the revenues are if they don't make any money. And we're already seeing serious discounting by Walmart, Target, and Amazon into the end of this year. And, of course, Best Buy down earlier this week, saying that these online retailers like Amazon are already starting to hurt their business. So it may be a race to the bottom to make sure you don't have any kind of exposure come the first of the year with a lot of products sitting around that did not sell for Christmas. So just some things to think about up here. Okay. We always like to talk about history when we start today. Now, in the markets today in 1937, the Law Committee of the New York Stock Exchange delivers a harshly worded letter to William O. Douglas, chairman of the U.S. Securities and Exchange Commission, declaring that the New York Stock Exchange leaders will not appoint an independent president or even apologize for claiming that the SEC has contributed to the stock market crash. Of course, this is, 8 years later, they're still fighting over it. Okay, in response, Douglas growls, all right then we'll take the exchange over and we'll basically publicize it and we'll go socialist on it. Meanwhile, the trustees of the New York Stock Exchange Pension Fund discover for the first time the exchange's former president, Richard Whitney, has embezzled massive amounts of pension assets to prop up his own failed stock trades. So, boy, talk about interesting times. People, I think he got away with $200 million, and that's in 1937 in the depths of the Depression. Things were really going on back then. And, of course, in 1963, we saw the market sell off the equivalent of about 450 Dow points today. Tomorrow, the next day that the markets opened. In fact, they closed a little early. I think they closed at 210, where they normally would have been open till, of course, 4. And tomorrow they would have been up 750 Dow points in today's Dow points. So kind of interesting to see how news actually pushes markets around. But it is interesting. Pre-market today, Foot Locker was up after beating on earnings and revenue. The Gap was up just a little bit, same thing. Beat bottom line, did not get the top lines. It's below consensus full year 2014 earnings guidance. Of course, they'd already pretty much told everybody about that. Micron was off a little bit after being pumped up yesterday by one of its biggest proponents, and they moved it down to neutral. I'm wondering, this is a commodities business, and this is going to be probably an easy one to short when this top does come in, because it's all about margins they're making now. And at the first of the year, there's going to be several more plants back online building memory, and we're probably going to see a big decrease in the price of memory and probably in the price of SanDisk and Micron. Pandora Media came out. It was down 1.5% pre-market, and it had above consensus revenue, but it's still losing money like all these. Ross Stores was off hard, 7% before the bell this morning on a below consensus revenue number. And, of course, we were talking a little bit about what sets up these moves and how do you find stocks and or sectors ready to blow up like they did Monday in the 3D sector. I've shown this chart many times before. We always get new viewers and listeners. Hopefully you're watching on Tiger TV or in the Den. Jean-Paul Rodrigue, pretty famous in 2008 for showing exactly and working out the phases of the bubble. If you Wikipedia Jean-Paul Rodrigue, you're going to find a little bit more discussion about what he does. And this chart, which is probably worth its weight in gold for a trader. You may not always know where you're at, but you should always be thinking where you're at in the valuation curve. This is pretty nice when it talks about just how markets actually sell off and goes through all the stages. They always have that like 7 stages of grief: denial, acceptance, all that kind of stuff. It's kind of that same thing. It's where a market takes off or a sector takes off. The first sell-off, the bear trap, media attention, where everybody starts paying attention to it on CNBC, enthusiasm, greed. Then there's delusions, because, of course, no one believes that anything can go down. At the very high, it's always the laws of finance do not apply this time. It starts to sell off. There's a denial. There's a little bull trap. You get a little bit of pop. You get everything's back to normal now. No reason to fear. And, of course, that's exactly what happens. Fear sets in, capitulation, despair, and eventually you get back to the long-term value of most stocks. It reverts to the mean. And if you're going to buy long-term, that's exactly where you need to start buying, especially if you can buy down there at the bottom of despair, at the blow-off phase in the bottom of the markets. Oh, yes, throw that towel in. Capitulation. Where's QE on that chart? I think we've got QE coming to an end next year, so I think we're going to see the first drops of that. If I read Bernanke's speech correctly, it really looks like they think that QE is not doing anything anymore, and they're going to start weaning us off of that. Even if it's just $1 million, they're going to start moving down probably in January. I imagine that Yellen's first meeting, I think, when is it, late January, I suspect that even if it's just $1, they're going to start getting everybody to the idea that QE probably is causing more problems than it's solving, and they'll decide to maybe move interest rates down, but they're not going to continue the whole push with QE out there. Yes, 57 times growth rate. Okay. But as the Fed says, keep calm. We'll always print more money. Of course, well, I'm going to hit this at the end of the day, so let's get out of that. Some discussions. There's always a market that takes off well in advance of its earnings power. We've seen that in the 3D space this week. Today in the Tech Insider newsletter, I went through, I don't know, probably 7, 8 that are very similar to these, where the free cash flow is just not coming. We, of course, bought 3D Systems, what was it, back at $17, $16 in the newsletter. We made the early money on it. From the part, it split, 2 for 3, or 3 for 2. 3 for 2. And this thing consolidated that out for a while, but this last whole run had very little to do with any kind of revenues or margins, just a lot of hoopla. So we'll talk about this when we get back. Boiler room, yeah, that's good. The Wolf of Wall Street.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with TAS Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to TAS Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Well, I think we've got some more disturbed people in the engineering room today, but what can you say? It's just finding excellent bumper music like that I'm sure it's very hard. Anyway, it's Spike Jones. You can give me a call at 877-927-6648. That's 877-927-6648. I love to have your call. If you have any questions, you can post them in the den. I don't have email here in the studio, so you can't email me today, but normally you can when I'm working out of my home studio. Take a look at it. Looking at Yamana Gold, AUY out here, not a lot of movement in gold today, rather flat, which is probably one of the first bullish signs going into a weekend. And of course, GLD, all of them pretty flat. I suspect we'll probably have a little bit more selling. I thought maybe we'd get a blow off to the bottom here going into the weekend. No such luck. So we're still looking for a move back down into the 1200s, but it'll be tough. Some of these stocks not looking too bad. I would have loved to have seen a lot lighter volume yesterday in AUY. It got to 8.4 million shares. It still hasn't tested the low out here on June 26th, so we still have just a little bit farther to go before we get our next sign. Energy's come off a little bit. Not a bad pattern in these gold stocks. Just haven't got a actual test of the lows. When we look at the GLD itself, looking at this, still looks like we might get to the 114.68. Of course, gold conference next week. Seems like gold likes to put in highs and lows at that gold conference. So a few people in the den suggesting that's when we're probably going to find some kind of lower high next Tuesday. But be very interesting. I still don't see any real change in the selling pressure in gold right now, even though it had a nice flat day out here. But keep an eye on it, see if we've got anything. And just reading a few things in the den out here. Okay, let's look at some other stocks out here of interest. Wells Fargo, we were looking at some of these in the XLF. This thing probably just has a little bit farther to go, but it's going to need a lot more energy to break through these highs. WFC is the symbol on this one. July 23rd, we had $44.79, and of course 23 million shares, and we're 50 cents, 40 cents short of that yesterday with 16 million shares, trying to push a little bit up on 5.6 million shares. I think we're probably about as fairly valued as we can at a high, and again, it's going to take some kind of incredible news to get this market to go much higher. I always look at the market as could it go 20 points higher, and probably the answer is 70% probability that it does go 20 points higher. There's probably a 30% chance that it can drop 100 points in a few days. And that's what always happens at these very high highs, and what we've seen in some of these stocks that had blow-off moves like Netflix. Anyway, there's one to be watching in the next couple of days. Let's take a quick look at the XLF since we are so close to these. This thing has kind of gone above the last previous high. You did it without a sign of strength, which you have to be very worried about. That is the last two highs, 51, 47 million shares. Yesterday's move at 37 million shares does not give a lot of people a lot of things to hang their hat on. Certainly much lower than the 51 million shares, and if you're talking about 47 million shares, really not that much different. We've got Wayne from Mesquite, Texas. And how you doing today?
Oh, pretty good, pretty good.
What would you like to talk about?
I was going to ask you if you can explain how you pick the top in triple D, or when the short. I don't see on the chart how you figure that out.
Did you listen to the show on Wednesday?
Yes.
Okay. Part of it was the intraday move in the ticker tape, not in the charts. This is where we're going to go to the break here in just a second. But why don't you hang on and we'll talk about this once again. But I did kind of talk about it on Wednesday, I think. Yesterday? Wednesday? Well, we'll bring it up again and talk about it. Anyway, be back in just a second. Hopefully you can hang on, Wayne.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And we're back. Is Wayne still on the line?
Yes.
Okay. I went through it today in my Tech Insider, and I went through it last Friday in my Tech Insider. But there's a few things you want to look at stocks that are ready for the wheels to fall off. And I think you said that I called Tesla. I didn't. I called pretty much the rest of them and a few others. And basically it's the business model that's probably flawed in comparison with the price of the stock. On Tesla, probably I didn't really call it, but I was saying, hey, it's insane. One of the reasons why I didn't push Tesla as a short was it would cost you $15 more at $180 to actually short it. So you would have been short Tesla at $180 like you were short it at $165. You would have been just by shorting it, you would have been down $15 in the 1 second it took you to short it. So the high short interest does not mean that a stock will not fall apart. It only means it's going to be harder for it to fall apart. But you want to see a lot of moves and wait, and a lot of times it happens intraday. But you're going to find these stocks like VoxelJet, which I actually bought on the IPO, and it these stocks will move up on very, very light volume, and then they'll gap up like this one did. You've got a few things that actually come together. One is a stock that probably isn't making much money, or it's making no money. That you have a huge run, and in the case of like DDD, it missed its earnings the last 2 times and still went higher. What does that tell you when you hear things like that? You know you're kind of in a bubble. And then at the very last, I talked about it, I think on Wednesday's show, about looking and reading the tape. And that's probably the most critical thing in there. And that is, if you watch the intraday, it's not watching candlesticks or anything else, but just sitting there and watching how the shares move in and out, trade for trade. So there's a element called tape reading, and I recommended a book that was published, I think, first in 1910 it's actually from Wyckoff, but it's called, I don't have it up here, Adventures in Tape Reading. But you can find it on Amazon. I think it's $20 or something. It says it's by Rollo Tape, R-O-L-L-O-T-A-P-E. But it's the only book I've ever found on talking about reading the tape. There's a little bit of just watching these over time and getting a real feel, kind of like the same thing like a surfer, getting a feel for the waves coming in. But when you start seeing stocks move up on no volume, $1, $2, $3, $4 in a day, and you see them moving on 100, 150 shares at a time, when normally over the course of the, let's say in DDD's case, the last 6 months, it would take 100,000 shares or 200,000 shares to move it $1. You know you're in very, very thin territory, and you just have to go ahead and pull the trigger. But intraday, you're going to see those stocks opened, went higher, and actually closed lower for the most part. So go ahead.
Well, I was just going to say, I noticed the volume was still pretty high when it was falling, so that's why.
Right, all the volume came in on the downside that day. Everybody knew when they saw it move, like VoxelJet I was short, which was the big short for me. I think I tried to short it, I think, I'll have to look at my notes again, at 62 or something, and I stopped out at 63. It was something like that. I lost $1 early in the morning, and then the key is you're not always going to get it right. And then I shorted it, I think, when it went through 67 that day. And it lasted all of about 10 seconds, and it was back down. It was back up. I didn't stop out at that close at the high there when it went to $70, and the next day it just started selling. But all of them were looking that way. It wasn't just one either. Okay, so it was not only that a single stock did it, but every single one of these 3D stocks were all acting the same way on the same days. So it was a preponderance of the evidence. It was a lot of watching the actual tape intraday, and also the moves in these stocks that could not be justified. Whether or not prices are going up, there's got to be some value in the company. And if the company hasn't doubled revenues and it's missing earnings, a good sign that it has become a football in the casino of the stock market, and not any kind of store of long-term value. But does that answer your question? You might want to look in the archives because I did probably 20 minutes on it, I think, on Wednesday.
Yeah, I just thought it had something to do also with the volume, and that's what I was looking at.
It did, but most all that volume, what you would see if you were watching the tape was them systematically taking out every stop to the upside, right? And then eventually there were no more stops, and there was like 50 and 100 share orders. And, on a huge day like that for volume, to watch, 2-3 minutes go by with 100 shares, you just saw it get up there like a train trying to going up some train tracks, and it loses its engine, still has a little momentum, still goes a little higher, but pretty soon it stops, and then it starts, headed back down the mountain, and it starts picking up speed. That's pretty much all you needed to see. Was just it wasn't just a little change. It was a massive change of them sitting there taking out every short to the upside, and then no volume. So it is a massive turnaround. But you could see it, especially, well, I sent out my alerts for my newsletter, I think, at 3 o'clock to the Tech Insider saying that we confirmed a blow-off top. But there's a lot of stuff. You can Google blow-off tops, but that is some of the ways that you can look at it. But you need to have a stock that is built on sand. And certainly, if you looked at Tesla at the highs, it was priced like it was selling 350,000 cars a year. They could only pretty much sell or build 25,000 cars. So, you basically had something that was valued at 12 times what it could do today, and those are almost always pie in the sky kind of things. I don't think the fires had much to do with Tesla, as the fact that all the money they had was going to go into building plants for batteries and building plants to build new cars and building plants, and suddenly all their money was going to go away, and they're probably going to have to issue more stock. And I think everybody realized that, or at least the people that were pushing that stock up there and beating the drum every day on CNBC knew that it was time to start getting out. So they ran as many people at the end, which is the easiest way if you're a stock operator, is to run the stock. Those shorts have to cover, and those are the easiest ways to get the highest price for your stock. But eventually you get to the point where no one will short it again, and that's when you see that super light volume and 3 and 4 point, 5 point moves in a day, and you just have to watch the tape. Don't watch the candles so much as literally sitting there watching the time and sales roll through. Okay?
Okay, thanks.
You bet. I got to get a drink here just a second. We had a caller, I guess he couldn't hang on. He was talking about Intel. Everybody knows I've been waiting for Intel to pull back to buy. We're not going to probably debate it too long. But basically, Intel already saying what we already knew, or I believe I already knew, which was that we're just a little ahead of this stock bottoming out. I still think we get 21.5 on this before it heads back up. When it does, I think it's going to go from $21 to probably 29 or 30 bucks. We've got Jim on the phone.
Jim, yeah, you think it's going down still on that heavy volume day right now?
Yeah, I think I've been waiting for this thing to get down to about $21.50 to buy it, to hold it for probably a year or so. I think it goes from...
How are we going to get down there right now? We're down there today with some big volume. How are we going to get there?
Just like everybody said, gold couldn't get back down lower. People sell it.
You think they're selling to the institutions?
Yeah. I think that the market's going to roll over here. We're going to have a good...
I've got to look on a candlestick chart right now. That's the long red candles, wouldn't say.
Yeah, it's got decent volume so far today. I think we're going to get back down to 21.50. I think the market's going to correct. We're going to get a lot of these stocks that are just ridiculously priced, like Amazon and Netflix. I think they're all going to come down significantly. When the air is out of the market, people are going to look at Intel as the value in the market, not as the pariah in the market as it's being looked at today.
Isn't the government shutting down in a few weeks again? We got to go through that whole big deal.
I don't think we're going to have a government shutdown. I think it's the. I think all we have is the debt limit issue, but I don't think they're going to shut the government down again. I think that.
Obama will be assassinated pretty soon or not?
I have a feeling that there's no way that he gets assassinated, nor do I hope he does.
Ruined my whole year.
Yeah. Okay. Well, thank you very much. But it's I don't know. Have a nap, Jim. I think that's what you need. I'm not wishing ill will on anybody today, especially on a day when we did have a president assassinated. Revolution. Yeah, I'm pretty sure that was somebody with a staged call. But anyway, it is what it is. I just keep on thinking that we need to get that 2150 area tested on to Intel before I'm a buyer, and I'm willing to wait patiently until we get there. But I digress. But of course, we've won so many awards for digressing on the show that it does not matter anymore. I'm going to have to build a new wing on the house just for the digressing awards that we have. Let's see, what else do we have? I wanted to get back to that. Hopefully we've got it. There it is. With a few other stocks I wanted to look at. A lot of stocks out here that I've been warning about have been, we brought this up yesterday, I think, which is OLED, or the day before. Another one that had been up on very, very light volume, coming back down the other side. Actually had been talking about Cree in the newsletter for a while, about it blowing off on a top. Cambridge also used to be known as Panel. A lot of these companies have a lot of patents. In fact, OLED is one that gets almost all its money on patents. And the problem with that is their patents are basically sold to Panasonic and a few other companies in Asia that really aren't pushing LED bulbs. We're seeing a lot more push by General Electric, Walmart, and Cree than any of those companies, and I have a feeling this is another one that's going to have a rude awakening. But this one, very clear signal that it wasn't going to be finding a lot higher prices. Well, we brought this up August 14th, $38.10, 2.1 million shares. So what do we get back over here on the right side of the chart? We get into it on the 18th with 1,500,000 shares the next day, 500,000 shares the next day, 1 million shares the next day, and we're back down hard and with some decent volume today back into this gap. And the volume probably going to be nice enough to get us back down to $28.72. No, I haven't discussed the latest China scam. I didn't even know that one's real. Okay. Other stocks. Noodles and Company. This is a recent IPO. This thing is getting back into its gap. A lot of these IPOs have been very weak as of the last 6 weeks, 8 weeks. Really been an effort to push a lot of these out the door without a lot of support underneath them. Noodles is another one. This one at least is probably coming back into some support level. I've been kind of watching it since it has come out. And not real familiar with the company. I don't think there are any noodles around here, but my guess is, or I guess from what I've read, they're supposed to be kind of like a Chipotle, but it's like noodles and that kind of stuff. ACN, I have a request from the den to look at that. We'll take a quick look. Ooh, that is sweet. Thank you, Angie in the den. We've got a nice low out here. You've got everything that you want. Thank Angie for pointing this out. This thing has come right back up, filled the gap. Second time, lighter volume. You've got a high volume untested low back at 69 bucks. You've got just about everything that you want to do. You could make a claim that the October 9th low came into the $69 low on lighter volume, but again, it did not break that lighter volume. It's still 78 cents higher. So you still have somewhere around an 8% chance that 69 bucks is going to get hit. Now, that is a high volume low. It is not uncommon to see stocks like this come back into that, but not break the low, and then eventually come back and get them again. So you certainly have that $69 low open in Accenture, ACN. Certainly not a whole lot of energy. You had more energy down on the last down leg than you had on this up leg, too. So not a whole lot more, but certainly it's not gaining any strength back up here into the end of the year. We'll be back in a minute.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're going to go right to Lou in Nashua. How you doing today, Lou?
Hey, not bad. How are you doing today?
Good.
Good. I have a question on shorting the S&P E-mini.
Mm-hmm.
I'm just wondering if it's a good idea at this point. Should I wait?
Yeah, I would wait. I think we're probably just going to drift up 1 or 2 points until Wednesday's close. We've already seen a huge drop in volume, which makes me think the market's on hold for the Black Friday sales numbers.
I see. Okay.
I cashed out most of my shorts on Wednesday, the rest yesterday, and I'm in all cash. I'm willing to sit in all cash till I get a signal. We're probably going to have 2 opportunities to short. That's going to be probably that Friday or that Monday after Black Friday. If we don't get any really horrible news, then it's going to hold up through the rest of the year.
I see. Okay. What's your thoughts on natural gas? Too high to get in here, right?
Too high. It's ridiculously low. just the problem with natural gas pretty much is that you just can't get rid of the stuff. And I don't know. It's like saying gold was selling for 5 cents a pound, and you said it was 6 cents. I mean, you know that it's worth a whole lot more. The problem is delivery and just having so much of it being burned off now. We've really, the only thing that's going to make natural gas really run is a lot of cold weather. And we haven't got it. In fact, I'm running my air conditioning full blast at home. It's 85 degrees down here.
Oh, yeah, right.
I mean,
not up here.
No, but the problem is there's nowhere to store natural gas. So every time everybody starts using a little bit, the price goes up. Everybody starts dumping natural gas back into the market, and then there's nowhere to store it again. And so this thing is in this kind of stupid loop of just getting a little movement. As soon as it starts to move, everybody dumps whatever natural gas they have back on the market. What we need is kind of a bitter cold, about minus 20 in Cincinnati, that lasts for about a month. And you're just, I just don't see it in the predictions of the weather yet. So I would say probably another month, maybe in the end of December, we're going to see whether or not we really start getting the kind of wicked winters. But even then, we still need a much better transportation route to get people to start depending on natural gas. And as long as we have the administration blocking Keystone, some of the other things, if we could get a few of those through, I think you'd start seeing natural gas actually move. But the thought is now that if you made it a gas that every industry could use, that there would still be the whole issue of getting it the transportation of it around, and liquefying it is just too expensive. So everybody wants some kind of natural gas lines put in, and if they can't get the Keystone line in, they're thinking it would be just as tough to get natural gas lines in.
Right.
So
okay.
there's that it's not the right thing, certainly, but if I was king today, and I would probably say get to start digging those lines for fuel, for natural gas, for everything. It's an efficient way to move goods and extremely inexpensive. It would make us highly competitive the rest of the world with the low price of natural gas. Anyway, I'll be back at the 4 o'clock hour doing the Tech Insider Hour. I will see you then. Remember, sell when you can, not when you have to. And if you're short, cover when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.